Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan's keeping an eye on the shop. We are going to get into this week's macro measure. It is dated for Sunday as always, but I'm clearly recording this on Friday afternoon here in the East Coast. It's a little bit, I guess, just before 2:15 p.m., something like that, quarter after two in the afternoon. Super busy weekend. And so I've got to get this stuff done now. Disclaimer, there we go with that. And we've got the intellectual property rights notice there. If you please take a look at that. And then very brief notes. We had a discussion. I'm going to try to move away from the notes. It's as much as I think these notes are important, I think it tries to clarify things and just share thinking, just having been through a lot of different market cycles over the years. We just don't seem to have a lot of enthusiasm for longer videos. So for the umpteenth time, really going to try to move away from this. I think there's some diehards that like it that way, but others that just really have no interest in getting into something even at higher speed playback that's very detail oriented. At least the best I can do off the top of my head. But anyway, here's the notes this week. I might bring these back. Just going to really go through them more so at the end, but really busy. I might just start doing this on Fridays if I can and keep it very short chart oriented, and have the guys, the rest of the gang, help me out with keeping an eye on UOA activity. But the big theme, I guess, of the week is that reality finally intruded into the market. We've been saying this for a while that we really had an issue, but you've got to go with the trends in trading. So let's get the share repositioned so we can look at the charts. Just very briefly, shouldn't take very long here. And that'll be out of the way. And that doesn't, oh, it just keeps moving back on me. So I will bring up a different screen, I hope. Let's see. And this should be bringing up my main chart. So we did spend a lot of time last week, an inordinate amount of time. The first time in a while we really talked about, I think, that we would see potential retracement, or significant, that where retracement levels could matter. And I guess it really wasn't time wasted, fortunately, right? When you spend as much time as we did on that, it's good that, we got hopefully some benefit out of it. The first one I would bring up really would be the SPY. And this one really cooperated with us pretty well overall, breaking down, as we said last week, potentially breaking down last week. They held it on the 50, came in, tried to rally. Then that really phenomenon that we talked about is the old, bounce back up to former support and see if you can reclaim it. And if not, it becomes resistance. And that happened very swiftly there on Monday. Then they punctured right through the 50 in the SPY. And then it was really kind of rough sailing from there. And I think we noted there were three different reasons, maybe four, as to why we thought this would be a target. Closing this gap was one of those. We thought there was a kind of like mini flat line potentially trying to develop there. And then, of course, the retracement there was the 23.6 level. And I think we actually did throw that the next one down would probably be that 100 day if it got there. So that's what happened. We did note, I think, that we would see the shorties roll over. So the 20 on down to the 10. And then that could become problematic because that's not really a good profile. I'm not a big SMA player, but a lot of people are. And I just know, just from looking at stuff over the years, that when you get these rollovers, they tend to become some short-term forms of resistance if it does manage to make it back up there. But I think that's really what happened. We were saying for the longest time, right, that just keep going with it, keep going with it, keep going with it. Fortunately, that was a good decision, right? We were, I think, rewarded for sticking with this as much as maybe, and I think we noted this, as much as it felt like it was at odds with a lot of things. We didn't really want to buy into the story that was being promulgated about rates lower sooner, that kind of thing. But you've got to just really go with it, right? Everyone kind of knows that it's the turning points that if you keep going with it, they catch you. And if you're too big at that point, you can really get hurt and give a lot back. And that's why I think the last, say, month or so tended to help us, because we didn't really see much to complain about. And we did note that in the form of we didn't think it gets much better, right? Like you rarely get much better than we were a few weeks back. And then there was no cracking of any trend or anything like that. So we had to wait for that too, because you just never know until there's some signs that maybe there's trouble. All sectors, nearly all sectors were working. Things were working great, but we did notice that the market did seem to lose a little bit of its swagger, to say the least. We were kind of flatlining there. That's a victory really for the bulls if they don't break, but ultimately, right, it became a victory for the bears if they do, right? So basically, right, a trend being halted, it could break either way. You know, the assumption usually is that we'll break in the direction of the incoming trend once you work your way through a consolidation. But clearly, signs started to develop. We did see some cracks, you could say, forming. And so we did kind of do the DEF CON thing, ratchet that up. We did the old get your downside put butterflies ready. You know, that we ran that for several weeks, maybe even a month. We did talk about the fourth year of the presidential election cycle and how April and May tend to be rough stuff during this time. And, you know, that cycle, we've been using it now for, I want to say like a year and a half, maybe, yeah, like a year and a half, where we've been really featuring it somewhere in that ballpark. And it's really been worthwhile in terms of keeping an eye on what typically happens. The seasonality has actually been quite good, and it helped a lot with the rally to end, I think it was 22, and what they started doing in 23 and so on. And I feel like it was bullish, not quite this bullish. It was bullish really early in the year, and staying this way really until now. And then it tends to get a little bearish, and it did. So this, all we're seeing here really is it's adhering to it, but to a much larger degree in terms of percentage movement, right? We got great bullish performance in the first quarter, and now here we are having some rough stuff, a little rougher maybe than what you get historically. But it's not over. We still have 10 or so days left in April, so we don't know where we're going to end up. And that's always the question, right? So now you've got to see, we talked about this in different webinars this week, just little things here and there, when there was a good time to cover here in the market and catch a bounce. And we saw that happen yesterday. And then we saw that the bounce really wasn't getting great legs to it. And we just noted in another webinar somewhere that that wasn't really a good sign, that you couldn't muster more than that. So bears just came back quickly, and bulls didn't really hold them at arm's length for very long. But now what do you do, right? That's where we're at this point in time. I would say, look, there's been legitimate damage done in this market from what I can tell, but it's not destroyed. And part of our notes have to do with that, which are right here. Let me see if I bring this over. Part of the notes this week are that we have I'll make the mention of CNN, the AAII survey, and so on and so forth, but I don't want to belabor that by going out to my browser, because that just lengthens these videos, which is really not something that a lot of people prefer. But just to summarize, I took a look at things. CNN, fear, greed, it's getting down there. It's in fear, but it hasn't reached extreme fear. You've also got the AAII survey, which really kind of spiked bearishly, but it's not really super high bear-wise where you'd say that's an extreme. So it's maybe on its way there. And the Fed Watch now shows, as of my last check on it about 30 minutes ago, I think it came in at July even, is now 57% chance that the target rate holds firm where it is currently 5.25 to 5.50. It holds there. There's a 57% chance, that it holds there through the July meeting. So that's a radical shift, much like last year. And like I said, all the credit for maybe not not believing the sales pitch for the second year in a row has to do with the folks that we follow that have been right about inflation, when it would sort of ebb, when it would then potentially flow again, and uh, not really paying attention to the mainstream, as I say, water carriers on TV that always explained everything away, especially right after there's been this tremendous run that has put valuations at levels, and you've got the public as long as they've ever been. You've got hedge funds that have kept getting crushed on short squeeze after short squeeze. Everybody was, as we noted a few weeks back, everybody was in the pool, and you get the seasonality and the rest of it kicking in very high valuations, and that's what you get. So that's where we ended up. Now we have to talk about how we got. I mean, now that we know how we got here, now we got to talk about where are we going. And so right now, like, I think you could make the case in SPY that you could see there's been a little support in here near this low. So it wouldn't be a shocker that we maybe try to put some kind of a rally together. At the lows, where you at exactly 30 on RSI? Not that I really get hung up on that. You're right below 31. If you look at that when I mouse over again, you're right below there in the lower subgraph. So in green now, it's right at 32. So near the lows, you were very close to 30. It's close enough for me. I don't get hung up on that. And you've got the 100 coming in right here. And I think there's a little bit of sort of flat line-ish respect forming for just below really where we traded on the low today. So there's a couple different things coming in there, and it wouldn't be a shocker for them to try to hold. Now, the other reason I would say that, and I don't really do a lot of this stuff, but I'm doing it this week because I think it's important. I'll try to give us more like a 10-minute chart of the SPY, but there's been there's been a lot of action going on really not too far from the 500 level we talked about. And I think we had that 497.38, that area pretty well targeted. And there's been a lot of selling, I think, that's happened down here. So I think that the gang maybe having to have absorbed inventory is going to want to try to mark things up to offload some of this, unless they can even sense something better and they believe they can get a squeeze going. But I think there's definitely going to be an effort to try to mark this thing up, and then maybe come back. And if they hold on to this retracement level, they'll probably even consider that a victory. Or in other words, if we close above 497.38 today. But then if you do that, you never know what Monday's going to bring. We don't know what the over the weekend news will be, the whole works. But I think you have to start looking at a possible bounce, and where would they bounce to? And I think that this level up here is going to be my first one. I would say right near 504.50 makes a lot of sense to bounce to, because I think there's been a lot of respect for that just in the short time that we traded up here. So that will be my first level to say, okay, that's where this bounce gets to. The next one I think is going to be probably right near this level, which is not too far above there. You're looking at probably like, I would say you're probably looking at, I'm a little bit lower than I want to be. I think you're probably looking at right around that 506-ish level, and that's going to bring you in with a 10-day. So you may as well just say 504.50, then whatever the 10-day happens to be, should it get there. And remember, the 10-day is the lightest weight one of the SMAs that we chart. A lot of people still keep it on their chart. That's why we do, frankly. But it's crossing over. A lot of the reason I don't like moving averages is crossovers and things like that is because a lot of times they're really late. You're getting in after there's already been a significant portion of the move, and quite often you can almost approach oversold conditions in this case, since we've been going down by the time these things cross. So taking those as a trade is not how I prefer to go, but it's not normally considered a good thing overall anyway. I'll just note that if you're moving, SMAs are rolling over, the shorties are rolling over, and dropping below a longer term one. So notice, that all the longer term ones, the 50 on through the 200, they're still all upsloping, while the 20 and lessers are downsloping. So you definitely have some discord here, between the intermediate or longer term trend, depending on how you want to look at it, and the shorter term trend. But again, you're approaching oversold, or you've gotten there. If you want to say you've gotten close enough, if you're me, you could say that. So I do think that they could definitely try to put a bounce together. Let's face it, they can always definitely try to put a bounce together, but I just mean from a realistic, technical, objective point of view, it's hard to say no, there shouldn't be a bounce at all, because there's been enough damage to, I think, warrant a bounce attempt. Now, what would motivate someone to start buying? I don't know. Right? I'll just show the sectors quickly. We'll talk about this in a brief sector situation video I'll record soon. But most of these sectors had a rough week, as you would expect, but not all of them. And interestingly, right, you can see that staples, the defensive sector, which I should be saving this for sector situation, but that's had a pretty good week, as has another defensive sector, which is XLU, right? So right there, the utilities and staples are doing their thing, the things that we expect them to do when markets run into this rough stuff. And that's one reason, why we tend to keep an eye on them. So let me just minimize that, go back to this chart. So people always want to know, well, where would I get in? It's very difficult, right? You're doing the following. If you start buying now, this is one reason why we're not really big fans of counter trend trading, is that until you've seen, in my book anyway, until you really have seen the momentum reverse, you don't really have much to work with. You're going against a trend that's pretty ugly, and as we all know, things tend to get overdone. So that's why it's really rough to be early when you're going against the trend, because there's often a lot more drop on the way. And even though you think it's oversold, it doesn't really matter, right? But that's why I would wait for some signs that things start to work a little bit better. And I still think you're still counter trend, but at least you could say, well, momentum developed and took me through there. I really think, unfortunately, for people that want to get in sooner rather than later, you're going to have to do your own work on the intradays to try to justify a really aggressive level, because I wouldn't touch this as a bullish entry yet. I need to see either more action develop or this entire candle to be reversed and me anticipate that it's going to close above 500.50, roughly speaking. If I thought that was going to happen, I would say, yeah, they're probably going to try to put a little something together. But so that's the tricky part, where you're not bombed out enough that you could say this thing is absolutely 100% bombed out, and nor are you just getting started, because it's been a pretty rough week and a half here for the market, and you did some serious damage. So you have to, I think, be ready to, if you're a day trader, you want to catch little pops and stuff like that, you got to be ready if they start taking it above that 550. As far as the downside goes, you've got to be more of a roller now that's aggressive versus had you gotten in sooner, because you've already missed, right, you've already missed a 3% drop plus, maybe even closer to a 4% drop on the low if we close down there. So you've already missed that the last couple of weeks if you haven't really been playing the downside. So what would you do? Well, you can still get involved. As they say, it's never too late until you see the momentum shift the other way. But at the same time, I think it is coming into an area where we would really expect there, as we said, we'd expect there to be a little support sort of near this 100-day. 100-day itself is at 492.15. And I think there's a little bit, again, I think there's a little sort of nascent potential flat line developing, maybe like a point or two above there. So that's where it would come into next, clearly. And if it doesn't hold there, you just got to go back and say, well, where was there other price action that kind of amassed near a certain level? There really isn't very much. That's one thing I always love to look for in a trading opportunity, is that there just isn't a lot of support or a lot of resistance in my way once I get past a certain level, because stocks usually fill those, I call them air pockets, those air pockets pretty quickly if the market wind is at their behind their sails. So that's what we look for all the time. It's just, of course, not always easy to find. But the next level, really, you got to go with that 38.2. So 480.53 would be your next level on that. And that's just above that 477.60 that we have there, kind of already noted as a former sort of plateau that the market could not break for about a month's time and then finally did. So those, I think that's your next level, somewhere between if the 100-ish doesn't hold, it really looks like that 477 to 480 would be my ballpark there. Remember, I'm not trying to do things down to the penny on, because I think I'm more of this close enough is close enough school, having learned about, really how much time and is involved in trying to be perfect down to the penny and how difficult it is. I think you're better off just being in the general vicinity and taking the win rather than waiting for every last red cent and risking giving a lot back because of being overly patient or too stubborn or whatever you want to call it. But in terms of the Qs, it's similar, right? They're already below the 100-day. They drop below the 50-day. They've got a very similar complexion as you would expect. We did say that a similar area on those, as opposed to the 23.6 with a gap and a flat line, would be this 38.2 that has a gap to close and some makings of a nascent flat line maybe that could develop in the future if the price action stays up near here over the course of time. But that would be the next stop, I think. You probably have to say that there's nothing really between the open of that candle in my book, 415, which is just about where we are on the low today. There's really not much there. If you want to make the argument that there's a little bit of resistance about 411, you're free to do that, and I don't think you're wrong. But that puts you really close to 408. So the next little window would be 411 to 408 in my book. And I'm kind of leaning, more towards 408, 409. Frankly, than I am the 411. But you still have to respect both. There is a little flatline activity there, but that's your next level if they continue on down. Now, this is right at the 30 RSI reading already. So this has been hit hard. Do note, right, that the SMH has been hit hard, right? This is the leadership area in my book, at least. And the stock of the moment, let's see, the stock of really this bull market performance we've seen since the lows of the fall, Nvidia was the leader for that. And that is now approaching oversold levels in the mid 30s on RSI. So it does have gaps to fill. I'm sure all of you remember some of those. We'd have to extend this line here, I believe, because remember, I do that. And I think if you start doing it, if you've never done this from important lines in the past, you'll see that. I think you'll see what I've seen over the course of time, which is, don't ask me why these things happen or why they matter again, but they often end up mattering again down the road. And for the last few months, that line was completely forgotten about, but I'm bringing it back into the picture because I do think there's a chance that there will be a good chance that it supports somewhere near there. It doesn't really line up. It depends on how fast it falls, but at the rate that it's going now, it probably doesn't really line up with a fib. But there is a little bit of a shelf there from this action back in February where it really hesitated at that level, and then it managed to surmount it and keep going. But you'll notice even the wick on the day that it got past there is really right about the same level. So, when you're talking about stocks that are cost $700 and change, a few pennies is not a big difference, but that's all really close there. And so I think you've got to respect that it's probably that level's about 742 ish, where that would all kind of come in. And if we put that over here, it sort of dovetails nicely, but it's not really on a fib. It just depends on how fast this thing were to fall. But if I were in doubt and the fibs weren't working, oh, you know what? I'm sorry, and that's more of a projection. So my bad. I thought I had a fib. I might have put that on my trading view charts. I'm sorry about that. Let me just add a fib here because I didn't realize it was an extension until I should have known that right away, but it wasn't an extension until I didn't pick that up right away. So we got to get a retracement on here. And that'll put us about there. Let's see. Oh, I grabbed the wrong one because my bad. Come on, man. Let me get this done here. Everybody can get this info. So let me make my adjustment here on 974 because this obviously is an important stock. And let me see what the low was on the day that I prefer to take the low from, 473.20. And I'll fix that. That way we'll get a precise number. I'm not really worried about it coming to there, but I don't want to get too dirty, right? So we want to be able to have accurate begin and end points, but that's right on 38.2 right now. And you could see that there was hesitation there. So no one that really applies these techniques should really be surprised that this stock is trying to find a little support here. But yeah, the next thing down is 742 in my book. I would say, look, if it doesn't hold here, you're probably going down to about 742. Would I bid 742.01 if I were short? No. I'd probably be more of a 745 bid. I'd be watching it or whatnot. I always shave. I call it shaving. I always shave a little bit in front of whatever I think the real number is so that I get executed, because a lot of people are using these techniques and I don't want to be caught up with the public, so to speak, right? But you can see that's just got a rough complexion. It's really taken a turn. And I'm not saying there's anything doom and gloom about the company. I wouldn't know, but it's very similar to everything else we've been looking at. It's just worth noting that it's really taking it on the chin, right? So that pretty much does it there on the tech side of things. We looked at SMH, we looked at Nvidia. These are the big drivers, and they're after the incredible run they had. I think we're just facing the inevitable other side of the mountain. I mean, it's hard. It's hard for me to buy the hype, even though early stage hype is great. To make money with, you're better off buying it. But I think when you've had an incredible run and something starts to sort of hesitate, you've got to take notice of that, right? Because there's usually, right, the markets usually do have an ebb and flow. It's just how they have it and when they have it, right? That's how it's hard to nail. But you even during really good times, there's still generally some kind of a pullback sprinkled in. And I don't think that this warranted it. I think this economy to me it's got some mirages working inside of it. And I think that the government stuff we've covered, all the stuff they've done to prop things up, I don't think it's been as good, and I don't think inflation has been what they're saying. So I think it's hurting the consumer more. The consumer's not in a great situation, regardless of what they've said. But that's what they've trot out a lot, and you've got to go with it initially until you see this kind of I think, window of opportunity where it might not be what it once was. You still have to be prepared to go with it even then, though, even if you're starting to sense that reality's going to crash in, because again, these guys are the masters of having something last longer than you'd ever believe. Well, and I guess the other thing they're the masters of is frustrating the living hell out of people that act on it too soon. And that just kind of creates this self-fulfilling vicious cycle that just keeps eating, the shorts just essentially keep eating themselves alive. Here is the Dow. And the interesting thing is I went back and looked at what we talked about, and we did say that we thought that this was already kind of near important support. And we noted that there was sort of a flat line near where it is on the low, 377. I can't remember the exact number we shared. I want to say it might have been like 378, but it really hasn't. You can see that it's not had the horrendous week, right, that the spies and the Qs have and other things have. But also note that phenomenon that we talked about of breaking below what was support. You can see that was support there, and breaking below it, and you can see it's really struggled. This is the perfect example. I mean, I hope I remember this one, that in April of 24, there's a great example of this. And if it just keeps failing to reclaim, right, that area, now the 10 is coming to join the 20. I'm sorry, the 10 is coming to join the 100. So if it can't get through those, and close above there and hold, right, that's a problem. And you've got the shorties rolling over like they are pretty much almost everywhere. So this to me is, I think you've got to wait this out. I think you clearly have this week's low as a downside trigger. I think that it's interesting that it sort of bucked the trend and held its own. But I think it's really because the Qs and SPYs have kind of caught up to its weakness more than anything else, and it just sort of held its own, and they're catching down to it. It will probably be a better way to put it, but it's in the mid 30s on RSI. It's not absolutely bludgeoned beyond recognition where it becomes a no-brainer buy. They are trying to turn it a little bit here today. Remember, the dollar and the yields are not doing much today. They really haven't had a spectacular week, as a matter of fact. So a lot of this is happening without really the dollar getting too much higher or yields getting too much higher. And that's a little bit scary. To me, that's a little bit of a recognition that their compass, some people are figuring that their compass is off, I'm guessing. But this bears watching because, right, if there isn't across the board little markup program that starts hitting, you've got to look at that mainly, I think, at that declining 20-day in blue for where that resistance would come in a big way. And I think by the time it would work its way up there, it would also kind of be right near a flat line. So you'd be looking at probably about on the DIA, I think you're looking at about 380, about 388, so that's quite a bit higher in terms of, it would be a nice little trade. But remember, if you start going long this thing, you're premature in my book as of right now at this moment where we're recording, but you are certainly counter trend and you're playing, right. You're maybe doing the old falling piano. We just don't know yet. You don't want to do the catching of the falling piano, the catching of the knife. You've got to be really disciplined. And if it doesn't work, get out. If you do get a pop, I always tell people that the trade options, consider just a quick trim, right? Because if you can sell 2 or 3 of your long calls after you get a pop, get a nice little tiny profit in there. This way, if it goes back to your trigger level and you can break even on the balance, roughly speaking, you still eke out a win and you don't get left with a bad taste in your mouth. And trying to stay, I think, positive in when the market becomes more challenging, it's very important always, but I think it's really important then because you don't want to get frustrated and lose your concentration, focus, discipline, and so on. But I think you got to get through the 10-day and the 100 if you really want to try that trade. I would keep going with this, though, because if it breaks down below this week's lows near 376 and change, I think you are really looking at the 38.2 retracement at that point. That's probably where you end up. And I don't think there's really been enough of one thing that's got me a little concerned here is that there just hasn't been enough of sort of like a corrective action to this bearish activity. So this has been kind of like a steady drip, and there's nothing really halting it yet. It would be nice to sort of see that, because then we can start ballparking where we think this thing could peter out at, and maybe how the degree of, you never can be sure, but the degree of how bad this really could be in accordance with what we would normally expect, right? And every situation is different, but I just mean general tried and true trading techniques. I'm sorry, charting techniques, my bad. Let's get over to IWM and we'll talk about that one. And this is another one, I think remember, I think I mentioned that we had some bearish stuff on this one. We had bearish SPYs too. And we had this big level picked out in here for it to maybe make it down to. We thought that made a lot of sense at that 193. It was we thought flatline-ish, and it was right on the 38.2, right near there, and it did work its way down. So it has had a little bit of a rough week, maybe not as bad as the others like SPYs and Qs, but it did have a rough week. It's hanging in there to an extent today. I don't know what's going on. Maybe it's just because yields are not really going higher. I don't know, but whatever's going on in there, this is just a really kind of ugly leg down, right? And it gets a little worrisome because you really do want to see something to say, okay, again, we can sort of ballpark what's likely to be at least a good chance of being the worst case scenario, but we don't really have that yet. We don't have that sort of counter move to this to work with. So it's still really in control of sellers. You're right near technically being oversold. For all intents and purposes, you are oversold. We did talk about this being, be careful. There's a ton of potential there if it started to catch up, but with rates moving up, this could be a false breakout. You got to be careful. That's why I really put these reminders in all the time, because again, these guys are tremendous at, baiting people and switching, basically, right? They hook people the wrong way. People are disciplined, they overstay their welcome, and then it gets ugly, and that's why you've got to have your disciplined approach, because it's not an easy game, and you could really get hurt if you play too aggressively and overstay your welcome one time. It can really be painful. But at this point, I think, look, you got to think that they're so close to the 200, 150 area that, and there happens to be sort of like a bottom there. There happens to be kind of like some activity over here where that's been a level that's mattered near that 190 level. So you're very close to where we would expect there to be more support. You're still not at the 50% retracement at 186.77 that we laid out last week, but you're close. So I think you got to respect that. I'm trying to get us a better look on things. I would respect that. Now, the factor I did mention earlier is you got to take into account, what if more news starts hitting that is not really, kind to the market. And of course, geopolitical's got to be a part of that, and then other things, but related to that, and there's plenty of gaps. And this thing really, if rates are going higher, this is just not a good thing for smaller companies typically. So this might be very problematic. There could be quite a few people that said, well, it's time for me to really load up, because this thing, I believe in the bull market argument, and this thing is about to break out. Excuse me. It's about to go back to its all-time high, which it was the only one that hadn't surpassed it. Plus, it had a discount due to inflation. It's going to roar. And you can see, right, once they had the false breakout reversal, it's been almost take no prisoners, right? Really, if you overstayed your welcome. So this thing is, I think, right, one scenario we should talk about is that they could do the old gap them down right to support and buy them. But I would say if it doesn't hold, you need to look to about 187-ish on this thing for where the next fib comes in. So really 187 to 190, we would expect there to be a support window. You're not very far from it. I do think we mentioned that CTAs were flipping this week. They started selling in some of these things, and there was more stock for sale depending on how the market did. I think the gang tried to hold it so they could maybe offload some inventory. Maybe they did, maybe they didn't. I don't know, of course, but it just hasn't worked out, right? It's just been almost like a relentless CTA type wave after wave of selling. There were a couple little waft algo moments where they mark things up and you're just wondering, there's really not a lot of buying happening here. How's this even happening? But that's what the waft algo does, in my opinion. It's meant just to keep a constant sort of controlled bid that just moves things up. It seems like that to me anyway. But as of right now, this obviously everything is taking a turn for the worse, right? And when we look at the chart complexions, there's just not a lot of great things to say. And you're in the no man's land, like I mentioned earlier, of you're not completely bombed out, but you're very close to oversold in a lot of cases. And so what do you do with that? Like that's a tough spot to be in, because you're not early, and before the next wrinkle could come our way, meaning that there could be a little bounce attempt. And remember, there's been a lot of amnesia over the weekends where they seemingly forget about the ugly performance of the former week, or certainly on a Friday, and just start moving things, right back up again. So let's get the Mag 7. I just want to note that the Mag 7 itself, they've all broken as a package. And so that's worth noting. We got to get Micro Shaft in there. We've got to get Tesla, and we've got to get, oops, I got an underscore in there, my bad. And we've got to get Tesla, which I'm sure they're going to want to start removing from there. And then, of course, Nvidia. And that should do it. But yeah, I mean, we were talking about this being close to breaking. It was hanging in there ever so slightly, I think, last week by the skin, as they say, of its teeth, and right above the 50-day, and had just plunged on a rough looking day. I'm sorry, it was right here. My one day early. Yeah, there's Friday. Sorry, hanging in there in terms of right above there, but kind of triangulating and looking like it had lost momentum. And then we finally got this week, and I guess Nvidia really falling apart, and that probably is clearly hurting it. Now, we also did go with Microsoft as our name of the week, thinking that we could get some, even though the puts were about $4, and we were looking at it near, I think we were near on Monday afternoon, we were somewhere near 413. We thought there could be a really $15 move in this thing, and it just about got there, not quite. Maybe it did get there. So even though they were $4 puts we were looking at, and we thought that for the movement potential was there. Now, I think it could have gotten even worse, but the way that it worked out, the 100 is saving Microsoft at the moment. I mean, if I had traded it this week, I would certainly just cover and consider this a win, especially with earnings coming out. And I'm not really a big fan of earnings speculation, but look, everything we looked at, you can just see it's been risk off, right? Everywhere we've gone, even in the sectors, they sort of took the risk off profile where they went after the staples, they went after the utilities. That's usually a sign of, right, defensive positioning. So that even worked. They're coming back in a little bit for financials today, a little bit for energy, and those were a couple of really powerful, strong movers that really didn't want to give much back. But I don't know. There could be specific reasons for that right now, but I don't want to get too far into that. So that is where we are on the big picture. You're really left, if this Friday closes close to here, you're really left in no man's land, because you've just got to be an opportunistic trader that's willing to consider that a bounce is you're probably close enough to have a legitimate bounce, but at the same time, you can't rule out more downside because a lot of these things are not, as of right now, they're not looking like they're going to close very well, and they might still have more retracement left right there before they really get to the next level, and of a place that we would expect them to really stop at. Not that they do that all the time, but that's what I operate under. Let's see. So I think we should have been pretty well prepared for this. We already talked about not mass destruction, but it's been pretty damaging. We talked about, JBHT, just wanted to mention that one. There's been signs of softening. We talked about the presidential cycle. May could still be challenging. Remember, EPS releases will pick up. They could be propellant for a squeeze. We're only 12 days away from the next Fed meeting. Keep in mind the tapping of underside, a form of support, if a bounce does develop, and see what they're able to do with it. If they can't reclaim things and they're right back down again, that's not a good sign. You really want to see these things be able to get back above what is now considered resistance and hold it and convert it back into support again. But let's look at JBHT, and then we'll kind of wrap, because as I noted, really not much happening really in terms of the VIX is well off. The highs it put in today, the dollar's doing nothing. It's literally unchanged, and the yields are down. TNX is down small. But JBHT, I think, big transportation company, and I think this is one of the things, right, that to me was is what I expected, sort of, from all the reading that we do, that eventually there'd be this acknowledgement that things are softer than they would really let on. Not JBHT. I mean the the gang, right? And the representatives of the gang, everybody that's affiliated with the gang. It was all happy talk, but really, I don't think it was ever as good as they of course they tried to make it out. And they basically confirmed that from what I read in the headlines, that it was just softer, right? The freight, the market's just softer, moving freight. So to me, again, with transports being important, that to me was not a good sign. That earnings, obviously, the earnings were not received well. Clearly, it was already struggling, which gave us concern that XTN specifically was not really joining the market's party. It, along with IWM, were sort of, again, the canaries in the coal mine. They turned out to, I think, both be right. Whereas the rest of the market, I think, went ahead with the story. And again, we traded it that way. That's the thing we always have to do. So it's not about making calls or taking victory laps or anything like that. It's about being smart week to week with what we're doing with our trading. And so that's what we try to do week in, week out. That's what we try to advocate for everybody else. But I do think this is important, that that's the type of stuff you might want to go back and check that out. I don't think it's the only thing that matters, and I don't want to try to overstate the whole thing. But yeah, I think if you go back a few days and you see what they had to say, their prices are getting adjusted. Where are we? Where are we? JB1's first quarter seen putting damper on recovery hopes. Let's see. There were other things that oh yeah, okay. Ominous for transport. So maybe go and look at good old Barron's, saying, right, its earnings miss was ominous for transport. Intermodal refers to freight traveling by both rail and truck. They find it to be the current environment has remained persistently challenging for longer than we had predicted. So to me, right, I don't want to overstate it, but they had a 9% decline in gross revenue per load, 22% fewer loads, right? So this to me is really confirming what I've been reading, and one reason why I've tried to express caution about really buying in heavily and getting away from risk management. Again, trade with the trend, no question about it, but you got to keep that one eye on risk, and you've got to be disciplined when you do it, because again, you overstay your welcome, and then things like this, you end up in a situation where you could give a lot back, or if you are in the wrong names, you could be giving, you could be performing even worse than giving back. You could be down, like pretty much anybody that bought this thing this year is down big at this point, unfortunately. So that's not a good sign to me. Again, a little bit of a canary market, acting very risk offish. I think you've got to be really careful here. Still, I think your DEFCON is still up towards DEFCON 1, DEFCON 2 at the very least, and know that you really have to be open to both sides at this point. You can't rule out a good solid bounce attempt here, and you also can't rule out more downside until there's no sign of a bottom yet. There's no sign of the market just completely bombed out, and you've got all kinds of news coming. So that's it. It's back into high discipline, super high discipline, getting singles and doubles, and going from there, right? Basically being very, very nimble, not being aggressive and sensing that, hey, this is on the way, I'm going to get big. But hopefully those downside put butterflies helped you to either profit or at least absorb, make some money to help other longs maybe that you prefer to hold. That help you absorb some of that risk that you were maybe getting hit on this week. That's a nice little feature that those can also provide to folks. I know Ryan did pretty well on a couple small things that he was able to put on. So on that note, I'm going to wish everyone a wonderful weekend. and a wonderful week ahead. You just keep your head on a swivel, stay disciplined, and I hope you got something out of this week's videos. As always, it can help you out in the near future. And I want to thank everyone for tuning in. Everyone, take care.